All right, welcome to Market Momentum. So there's this huge story brewing in the US with all this political drama really cranking up. But here's the funny thing. While all the headlines are screaming crisis, the financial markets, they're telling a completely different and way calmer story. And that really is the big question we're digging into today. You've got the threat of a US government shutdown making news everywhere, all tied up in debt ceiling politics, but Wall Street just seems to be shrugging it off. So what gives? Why the disconnect? Okay, so first, a quick look at the situation. Basically, there's a political standoff over spending and the debt ceiling, and that's threatening to temporarily stop all non-essential government services. It definitely sounds dramatic, and, from a political view, it absolutely is. But here's the thing. Is this some kind of crazy, unprecedented event? Not at all. Government shutdowns have happened plenty of times before. The longest one in recent memory was 35 days back in 2018. For investors, this isn't some new crisis. It's like a rerun of a movie they've already seen, and they already know how it ends. So that brings us to how the market is reacting. Or more accurately, its complete lack of a reaction. I mean, if investors really, truly feared some kind of catastrophe, we'd see it plain as day in the numbers. But just look at this. Despite all the drama on the news, the S&P 500 barely moved. And the tech-heavy Nasdaq also pretty much flat. And then you've got the Dow, which is virtually unchanged. Look, this is not what a panicked market looks like. This is the behavior of investors who are just watching what they believe is some temporary political theater. So the real takeaway here is that markets are always trying to look ahead, right? If investors genuinely believed this shutdown was going to cause some serious, long-term economic damage, the sell-off would have happened weeks ago. This calm tells you Wall Street fully expects a deal to get done, just like every other time. Now, while the stock market is just kind of yawning at all this political noise, other parts of the market are telling a totally different story. Over in the crypto space, the mood is much more cautious, and it has absolutely nothing to do with a government shutdown. It's all about its own internal weakness. You can just feel the shift in sentiment here. Just a little while ago, it looked like there was potential for one last push higher, kind of fueled by hopes of more global liquidity. Well, that's flipped. The rally everyone was expecting just didn't show up, and now key technical indicators are basically screaming sell. And this weakness, it's pretty much everywhere you look. Bitcoin's struggling, which makes buying more right now feel pretty risky. Ethereum has had several down days in a row, and that little altcoin rally we saw over the summer, yeah, that looks like it's run out of gas. The market is now kind of looking ahead to late November, hoping for some new catalyst to show up. And, this whole idea of markets marching to the beat of their own drum extends to precious metals, too. Gold and silver just had an incredibly wild day, and it offers a perfect lesson in market psychology and volatility. What we saw was a classic head fake. There was this huge, sharp drop early in the day that probably spooked a ton of people into selling. But then, once the initial chaos of the US market open passed, it completely reversed course. The people who didn't panic were the ones who were rewarded. This just hammers home a super important strategy for volatile assets. Patience is everything. Rushing to make a trade during those first 30 minutes of peak volatility is often a losing game. The real trend for the day often reveals itself once all that initial chaos subsides. So let's tie this all together. If the stock market isn't being moved by the shutdown and crypto and metals are following their own internal logic, what is actually driving these markets? Well, a lot of the time, the answer lies in market dynamics like momentum. It's this powerful force where an asset starts moving in one direction, and that movement itself attracts more money, which pushes it even further. It's almost like a self-fulfilling prophecy. And this brings to mind that classic wisdom from Warren Buffett, right? When the tide goes out, you discover who's been swimming naked. It's a great reminder that underlying financial health is what truly matters in the end. Because when that momentum music finally stops, the traders who are over-leveraged, who borrow too much to ride the wave, they're the ones who get exposed. And this brings us to the most important takeaway of all. Successful investors learn how to distinguish between the temporary noise of political headlines and the real underlying trends driven by the market itself. The headlines are designed to grab your attention, but the trend, that's where the real story is told. So, stepping back for a second, let's look at the big picture. Because at the end of the day, learning to spot that difference between the headline noise and the actual signal, that's the whole game.
And it's true for every single asset we've talked about today, from the S&P 500 to gold to Bitcoin.
And that really is the question to leave you with, right? In your own world, which headlines are you learning to ignore? And what are the real trends that truly deserve your attention? Well, thanks so much for joining our channel today. If you found this analysis valuable, your subscription and likes will be appreciated as it really helps us keep these explainers coming.